Hi everyone, and welcome to this workshop on understanding bank accounts. I'm really glad you're here, whether you have already opened your first account or you're just getting started. This session is all about helping you to take control of your finances with confidence. We are going to explore different types of accounts, checking, saving, high interest options, and more. But we will also get into practical stuff like avoiding unnecessary fees, staying safe from fraud, and choosing the right account for your goals. So don't worry if you are not a banking expert. Hi everyone, and welcome to this workshop on understanding bank accounts. I'm really glad you're here, whether you have already opened your first account or you're just getting started. This session is all about helping you to take control of your finances with confidence. We are going to explore different types of accounts, checking, saving, high interest options, and more. But we will also get into practical stuff like avoiding unnecessary fees, staying safe from fraud, and choosing the right account for your goals. So don't worry if you are not a banking expert. By the end of this workshop, you will feel much more equipped to make smart financial decisions. And let's get started. Let's begin with checking accounts, probably the most commonly used type of account. A checking account is designed for daily transactions. That means it's perfect for paying rent, buying groceries, transferring money, or receiving your paycheck. You usually get a debit card, online banking access, and in many cases, tools like e-transfer or automatic bill payments. The main benefit is convenience. You can withdraw or spend money anytime. But here's something to note. Checking accounts usually don't earn interest. That means your money does not grow while it's sitting there. Also, some checking accounts charge monthly maintenance fees, especially if your balance drops below a certain amount. That's why it is important to shop around for an account with low or no fees and features that suits your lifestyle. Now, let's talk about saving accounts, which are designed to help you grow your money over time. Unlike checking accounts, saving accounts do earn interest, which means the bank actually pays you a small amount for keeping your money with them. It is a great place to park your emergency fund or save for short-term goals, like travel or school expenses. But there is a catch. Saving accounts are not meant for everyday spending. They often come with limits on how many withdrawals you can make each month, usually 6 or less. If you go over that, the bank may charge a fee or convert your account. So, think of saving accounts as a place for money you want to protect, not spend regularly. Now, here's an option you might not hear about as often: money market accounts or MMAs. These accounts are sort of hybrid between savings and checking. They often offer higher interest rates than regular savings accounts, which is awesome for growing your money faster. Some money market accounts even let you write a limited number of checks or make debit transactions, so you get a bit more flexibility. But, and this is important, they usually require a higher minimum balance. If your balance drops too low, you might not earn that great interest rate or you could get hit with a fee. So, money market accounts are best for people who can keep more money in their accounts and want the benefit of both savings and access. Let's move on to certificates of deposits. And in Canada, we call them guaranteed investment certificates or GICs. These are long-term savings tools. The idea is simple. You lock your money away for a fixed period, like 6 months, 1 year, or even longer. In return, the bank gives you a higher interest rate, sometimes much higher than a normal saving account. But here's the thing, you can take your money out early without paying a penalty. So before you open a certificate of deposit account or GIC, make sure you won't need that money anytime soon. These accounts are a great option if you are saving for something in the future, like tuition or a car, and you want to earn more interest without risking your money in the stock market. Joint accounts are bank accounts that are shared between two or more people. These are commonly used by partners, family members, or even roommates who want to manage shared expenses like rent, groceries, or bills. Everyone listed on the account can deposit or withdraw money, which makes managing shared finances easier. But remember, shared access means shared responsibility. If the other person spends too much or racks up fees, you are both on the hook. So, before opening a joint account, make sure there is a clear communication, trust, and maybe even a budget in a place to keep things fair. If you are a student or under a certain age, most banks offer student or youth accounts with special perks. These accounts are great because they usually come with no monthly fees and they often include tools like budgeting apps, alerts, and sometimes even free e-transfers. Some banks even offer bonus cash for signing up or maintaining your account responsibility. These accounts are ideal for learning how to manage money while avoiding fees. If you're new to banking or still in school, this is definitely the best place to start. So, how do you actually choose the right account? Start by thinking about your financial habits. Do you mostly spend money day to day? Then, a low fee checking account might be best. Do you want to grow your saving? Then, go for a high interest savings account or GIC. And compare things like first, monthly fees, second, minimum balance requirements, third, interest rates, fourth, access to mobile or online banking, and fifth, overdraft protection. The best account depends on your lifestyle, so don't just pick the one your friends use. Pick what works for you. Okay, let's talk about online banking. It has changed the game when it comes to managing your money. With just your phone or laptop, you can check your balance, transfer money, and even deposit checks. But while online banking is super convenient, it also means you need to be careful. This part of the workshop will show you how to use online banking wisely, avoiding unnecessary fees, spotting fraud, and keeping your information secure. Online banking gives you access to your money 24/7, which is a game changer. You can check your balance, transfer money, pay bills, and often do all of this with lower fees than traditional in person banking. Many online banks also offer better interest rates because they don't have the overhead of physical branches. But always remember, security is key. Keep your login details safe. Use strong passwords and don't log in from public Wi Fi. We will go over more security tips soon. All right, let's talk about something that sneaks up on a lot of people: banking fees. These small charges can really add up if you're not careful. Some of the most common ones include minimum balance fees, when your account dips below a required amount, overdraft fees, if you accidentally spend more than you have, ATM fees, especially if you use an out of network machine, and even paper statement fees, just for getting your bank statement in the mail. The good news? Most of these are totally avoidable. A little bit of awareness and planning can save you a lot over time. So, let's go over some quick but powerful tips to stay ahead of those fees. Use direct deposit. It can help you qualify for fee waivers or even higher interest rates. Set up alerts. This helps you track your spending and avoid going below the minimum balance. Monitor your account regularly. You will catch errors or fraud early. And most importantly, shop around. There are so many banks out there, and some offer completely fee free accounts with great digital tools. The key is to stay informed and proactive. You are in control of your money. Now, let's shift gears and talk about something really important: fraud prevention. As more of us move to online and mobile banking, scammers are also getting more creative. But the good news is you can protect yourself with a few simple habits. First, keep your login information private. That means no sharing passwords and no writing them down where others can find them. Second, use strong passwords, at least 8 to 12 characters, including a mix of upper and lowercase letters, numbers, and symbols. And third, turn on multi factor authentication. This adds an extra layer of security by asking for a code when you log in. These small steps go a long way towards keeping your money safe. Now, let's break down the types of fraud you should watch out for. First, phishing scams. These are fake emails or texts that try to trick you into giving your banking information. They often look legit, like from your bank or delivery company. Always double check the sender. Second, identity theft. This is when someone uses your personal information, like your SIN number or address, to open accounts in your name. Third, card skimming. This happens when devices are placed on ATMs or card readers to steal your debit card details. If anything feels off, do not ignore it, trust your instincts, and report it to your bank right away. If you do suspect fraud, the most important thing is to act fast. Here's what you need to do. First, contact your bank immediately. Most have dedicated fraud departments that can freeze your accounts and help recover your funds. Second, report identity theft to the appropriate agencies. In Canada, that might be the Canadian Anti Fraud Center. Third, consider freezing your credit, especially if personal information like your SIN or ID has been compromised. Time is everything when it comes to fraud, so never wait or second guess yourself. So far, we have covered a lot, from checking and saving accounts to avoiding fees and spotting fraud. But let's zoom out for a second. At the end of the day, understanding your banking options is key to financial stability. Whether you are a student, a part time worker, or managing multiple income streams, choosing the right accounts can make a big difference. Banking does not have to be confusing or intimidating, especially once you know what to look for and what to avoid. This guide is here to help you feel more in control of your financial future. Let's take a deeper look at checking accounts. These are built for daily use. You can make unlimited withdrawals, deposits, and transfers. Features usually include a debit card, online and mobile access, and often direct deposit options. What are the pros? They are convenient, easy to use, and give you instant access to your money. What are the cons? You probably won't earn any interest, and there might be fees for things like overdraft or going below the minimum balance. So, use this account for your daily spending, but do not rely on it for saving. Saving accounts are all about building your money over time. These usually come with limited withdrawals. This helps you avoid dipping into your savings unless it's really necessary. And they offer interest, which means your money earns a little extra just by sitting there. The pros: it is a safe and low risk way to save. The cons: the interest rates are often low, and some accounts have minimum balance rules or withdrawal limits. So, this is your go to for emergency funds, short term saving, or any money you don't want to accidentally spend. If you want to take your savings to the next level, check out high interest saving accounts. These accounts offer much better interest rates than standard saving accounts, especially at online banking. Some pay 2% or more, which adds up significantly over time. However, high interest saving accounts often have conditions like maintaining a minimum balance or limited withdrawals. Still, they are an excellent option if you are building up your savings and want it to grow faster without taking on risk. It is a perfect next step once you have your basic savings habits in place. Lastly, let's revisit Certificate of Deposit or GICs, which are perfect for long term savings. These accounts let you lock in your money for a set amount of time, anywhere from a few months to several years. In return, you get a guaranteed interest rate that is usually higher than regular saving accounts. The pros: they're safe, low risk, and the interest is predictable. Cons: you cannot access your money early without paying a penalty. Use these when you are saving for something in the future, like tuition, a car, or a big purchase, and you won't need to touch the money for a while. All right, so next up is something called money market account. These are like a middle ground between savings and checking accounts. With an MMA, you usually get a higher interest rate than regular saving accounts, and you can sometimes even write checks or use debit card, but with limits. Now, the catch is you often need to keep a high minimum balance, and if you don't, you could face fees or lose the better interest rate. So, these accounts are ideal if you have got a larger amount of money you don't need to touch too often but still want to keep semi accessible. If you are students or if you know someone who's just starting out with banking, students and youth accounts are where it is at. They are designed with low or no monthly fees, and they often come with financial literacy tools like budgeting tips or alerts. Some even offer perks like free e transfer or sign up bonuses. These accounts are perfect for learning good habits without being penalized for small balances. It is all about making banking easy while you are still getting the hang of managing your money. If you ever plan to run your own business, or maybe you already have a small side hustle, you will want to open a business account. These accounts are specifically for managing your business finances. They help you separate personal spending from business expenses, which makes everything cleaner, especially when tax time comes. They also offer features like merchant services, business credit card, and sometimes payroll support if you have employees. Even if your business is small, having a separate account helps keep you organized and professional. So, let's say you are ready to open a bank account. What's the process? There are four key steps. First, choose the right bank and account. Second, gather your documents. Third, apply online or in person. Fourth, activate your account. This step is easier than you might think, but getting it right from the start sets you up for success. I will walk you through each part next. First things first, choose a bank and account that match your needs. If you value convenience and low fees, maybe look at online only banks. If you prefer in person support, a local or big name branch might be better. Compare things like monthly fees, ATM access, mobile app quality, overdraft protection, and interest rates. Also, think about the account type. Do you need a checking account for daily use or saving accounts to build wealth? Make sure it fits your routine and goals. Once you have picked a bank, you will need to collect a few things. In most cases, you will need a government issued ID, like your passport or driver license, your social insurance number, proof of address like utility bill or rental agreement. Some banks may also ask for a small deposit to activate the account, so be ready with a bit of money just in case. Having these documents ready makes the whole process quick and smooth. Now it's time to actually apply. Most banks let you do this online, which is super easy. Just go to their website, fill out the form, upload your documents, and verify your identity, usually through a selfie or video call. If you would rather talk to someone face to face, you can go to branch. Just bring your documents and a representative will walk you through the process. Either way works, it just depends on your preference. Once you are approved, the final step is to activate your account. Here is what that means. Set up online and mobile banking. Enable two-factor authentication for security. Order your debit card. And if needed, request checks. This is also a good time to customize your alerts, like getting notified when your balance is low or when a large transaction happens. You are now fully set up and ready to use your account responsibly. So now that your account is up and running, how do you actually manage it well? This part is all about mastering your account. You will want to first avoid hitting fees, second, track your transactions regularly, third, use features like online bill payments and transfers. Fourth, make sure your money is working for you, especially in savings accounts or HISAs. Think of it like a car. Just because you have the keys does not mean it will run forever. You have to maintain it. And it's the same with your finances. Let's come back to one of the most important topics, fees. They can sneak up on you if you are not careful. Here are a few common ones. Monthly maintenance fees, just for having the account open, overdraft fees when you spend more than you have, ATM fees if you use a machine outside your bank's network, foreign transaction fees when using your card abroad, paper statement fees, yes, just for getting your statement in the mail. Knowing about these ahead of time helps you avoid them. And honestly, saving $10 or $20 a month in fees really adds up over time. Okay, now that we have covered the most common bank fees, let's talk about how to avoid them. Here are some practical tips. First, try to open no fee accounts. A lot of online banks offer these and they are super budget friendly. Second, keep your balance above the minimum to avoid low balance penalties. 3. Use your bank's own ATMs. This helps you skip those 2 to 4 third party fees. And 4. Go paperless. Choosing e-statement not only saves money but also reduces clutter. These small habits may seem simple, but they really help you keep more of your money where it belongs with you. Let's talk about getting set up with online banking, which is honestly a game changer. It usually starts by going to your bank's website or downloading their app. You will need your account number and some ID info to register. Then, make sure to create a strong password, set up two factor authentication. This adds an extra step for login, like a text or email code. And once you're in, explore the features like checking your balance, paying bills, or sending e transfers. Online banking gives you full control anytime, anywhere. It's fast, secure, and makes managing money way easier. Now that you're set up, let's talk about what you can actually do with online banking. You can check your account balance and transaction history in real time, transfer money between your accounts or to others, pay your bills automatically, which helps you avoid missed payments or late fees. Some apps even let you deposit checks by taking a photo. You can also set up custom alerts like if your balance gets too low or a large transaction goes through. So really, online banking is more than just convenience. It is a smart way to stay organized and in control. Now let's focus on keeping your online banking safe and secure. Here are a few essential tips. Use strong passwords, not your birthday or name, mix letters, numbers, and symbols. Never log in using public Wi Fi like in coffee shops, it is risky. Turn on alerts for suspicious activity and check your accounts regularly. That way, if anything seems off, you will catch it fast. Remember, your money is digital now, so protecting your login is just as important as protecting your wallet. Let's come back to high interest saving accounts because these are one of the best tools for growing your money safely. A high interest saving account, like a regular saving account, but the interest rate is much higher, often 2% or more. That may not sound huge, but over time, especially with compounding, it makes a big difference. They are great for building an emergency fund, saving for tuition, or any mid to long term goal. The key is to keep your money in there consistently. Try not to dip into it and let it build. Let's look at a few examples of the top high interest saving accounts in Canada right now. EQ Bank is offering around 2.5% interest with no minimum deposits and no monthly fees. Tangerine gives about 1.75% and they often have promotional rates for new clients. Simply offers 2.25%, also no minimum and full mobile access. And Motive Financial is one of the highest at 2.8%, but you will need to deposit at least 1,000. Always read the fine print. Some rates are temporary or require you to meet certain conditions, but comparing rates helps you get the most out of your savings. Now that you know what high interest saving accounts are, how do you get the most out of them? Here are a few ways. Compare rates often. Banks change their interest rates, so don't be afraid to switch if there are better offers. Minimize withdrawals. Some accounts drop your rate if you take money out, and most importantly, set up automatic deposits. Even $10 or $20 a week adds up over time. When you are consistent, you will be surprised how quickly your savings grow. High interest saving accounts are all about building smart habits and letting your money work for you. All right, so let's wrap it all up. Here is what we have covered today: the different types of accounts, checking, saving, high interest saving accounts, GICs, and more. How to avoid common banking fees, how to recognize and report fraud, and how to use online banking safely and effectively. At the end of the day, managing your money isn't just about numbers, it is about confidence and control. When you understand your options and make informed choices, you are setting yourself up for a stronger financial future. Thanks so much for being here and learning with me. I hope you feel more empowered to take charge of your banking and savings.